Good morning, and thank you for joining us for this important panel. Is New Jersey affordable, and does that impact business growth in our state? Do our high costs chase away capital that leads to business growth? Will an affordability agenda help our efforts to bring capital back to our garden state? To discuss this chasing of capital, we have a panel this morning of esteemed experts in different areas of business and taxation. I will turn it over to each of you to briefly introduce yourselves, and then we'll roll into questions on different aspects of affordability. First up, Deborah Bierbaum is the Director of External Tax Policy at AT&T. She's an expert on how taxes may impact the affordability of a corporation operating in New Jersey. Deborah?
Good morning, Chris. Hi, I'm Deborah Bierbaum. I am the AVP of External Tax Policy for AT&T. I've been in the tax policy field for over 40 years now. Prior to joining AT&T, I was the Deputy Commissioner of Tax Policy for New York. And I'm honored to be the co-chair of the Joint New Jersey Business and Industry Association and the New Jersey Chamber of Commerce Tax Committee. Thank you, Chris.
Thank you, Deb. Next up, Senator Stephen Oroho from the 24th Legislative District in New Jersey. He is the Senate Republican Budget Officer, and he's a champion in our legislature of policies supporting business growth, including in the tax and affordable area.
Hey,
Senator?
Chris, thank you very much, and great to be on the panel here with everybody. Talking about capital, it's and attracting capital and retaining capital. It's something I've been trying to focus on for almost all my years in the legislature, and I'm glad to be a part of this panel. And I'm also glad to see we actually have, I think, Deborah, you might be a CPA too, but I know Alan, he's definitely a CPA. So we have at least 2 or 3 CPAs on here.
That's a good thing. Next up, Mark Pfeiffer is a Senior Policy Fellow and Assistant Director of the Edward J. Bloustein School of Planning at Rutgers, the State University of New Jersey. He is an expert in local government and property taxes, and we may have heard that property taxes are sometimes an issue that people complain about in New Jersey.
And I am not a CPA. Thank you, Chris. I'm the Assistant Director of the Bloustein Local Government Research Center. I've been at Bloustein School for about 7 years now, after spending 36 years as a town administrator and a state government agency administrator overseeing local governments. I spent some 36 years doing those types of things, and I'm now about 45 years into spending a career in public service dealing with New Jersey state and local governments. I got to serve with Senator Oroho on the Path to Progress program a few years ago, and I'm really good at figuring out why we have the problems we have, but less good on giving people great, brilliant ideas on how to solve them.
Thanks, Mark. And last on the panel this morning is Alan Sobel, is the managing member of SobelCo LLC, and he's the 2020-2021 president of the New Jersey Society of CPAs. He's a leader in our accountant industry in New Jersey. He can speak to a wide range of issues that his compliance face here in the state.
Well, thanks, Chris. And I am very honored and privileged to be on this panel along with my colleagues here. And, I don't have a lot to add to the introduction that you said other than, I employ about 170 people in the state, my partners and I, and representing the NJCPA, we represent over 14,000 CPAs in the state of New Jersey. So we have a pretty good cross section of members who are dealing with businesses throughout the state.
To start us, I had a question I wanted to get everyone's thoughts on. New Jersey's had an affordability problem for a long time. We know that it's not a cheap state to do business in, not a cheap state to live in. But yet the solution to this continues to elude us. Can we make it better? Does this affordability or lack thereof impact our state's competitiveness? And then how much do taxes, government overspending, long-term debt impact that? Senator Oraho, I'd like to start with you on that.
Oh, thanks, Chris. I absolutely believe that we do have an affordability problem. I actually think what we have more than is a value proposition problem. New Jersey is never going to be a low-cost state, but we have to be a high-value state. Unfortunately, with the taxes, the regulations, the fees, the debt, and the fact that we haven't dealt with many of our unfunded liabilities has caused us to be uncompetitive And unfortunately, as Mark had mentioned in his introduction, we've talked about these issues for many, many years. And unfortunately, there's no silver bullet. We just have to have the fiscal discipline, in order to make the changes that are necessary. New Jersey's assets are terrific. We've got a great location, a great education system. We can argue about how it's funded and where it's funded and whatnot, but we also have a terrific employment base. But we overpriced our assets. And quite frankly, that has led to almost, since 2004, it's approaching $40 billion worth of adjusted gross income that has left the state. That's a net number, net of what has actually come into the state. And then, so, I do think that we've had an affordability problem, and it chases capital away. A lot of times I like to say, New Jersey's great at creating wealth, but it's one of our biggest exports too.
That's an excellent point, Senator, and you've been a leader on that in the legislature, so we thank you for that. Alan, what do you think from the accountant's perspective?
Well, I'm just going to, build upon what Senator Oroho said, and I think he's absolutely correct. I would put it just in a different word. I think we have an image problem as well, and that is, New Jersey is, not last or first, depending upon how you look at it, in property taxes, and that just goes to the heart of why we have an image problem. And then, of course, we're surrounded by other states who also have high costs. But we just don't seem as a state to do a very good job of promoting our great education system. We don't do a great job of promoting our incredibly vibrant workforce and talent that exists in the state. And I think we need to leverage that a little bit more. We're probably not going to get rid of the affordability problem just because we're a mature state that just has high costs. And frankly, if we were to deal with some of that, our property values would be going down, which I don't think property owners would be happy about. Our wages would go down, which I think our workforce would not be happy about. So what we have to do is we have to drive economic growth. And I think as it relates to the image issue, I don't think we do enough in the state to promote economic growth. And our leadership, oftentimes ignores that at the cost of trying to, develop an agenda that helps, our citizens. But we can't do that unless we have a strong economic engine. And so I just think that from an image perspective and a policy perspective, we need to do more to drive economic growth.
Thank you, Alan. Mark, Alan opened up the property tax issue, and I know you've been in local government for a long time. What do you say about affordability and the issues I laid out?
I think I'm going to echo, because this is really easy for me at this point, what both Alan and Steve said. It's that combination of the challenges we have, and I'll can talk about some of that stuff a little bit deeper if we want. But I think one of the big issues we have that has prevented us from solving it is the ability to make the political decisions that are necessary to minimize the impact that we have, to promote economic growth, and yet understand that we have a lot of citizen wants and desires, but people don't want to pay for it. That's the challenge we have. People think we pay enough for property taxes, although frankly, you can look throughout the state and you'll see all kinds of different property tax rates. People in one town will pay significantly less than people in another town of similar incomes, but complain that their property taxes are too high. Complaining about property taxes being high is a very easy thing to do. It's, for most people, it is more than they want to pay. The challenge is recognizing that we do get a lot of good for it, but there's a lot of areas where we don't make good political decisions because we basically spend more money than we have to in some areas, and getting that under control is shown over generations very difficult to do.
Thank you, Mark. And Deb, as somebody who sees from an employer perspective what a major employer in the state has to pay in terms of taxes and what it costs to afford to live and operate business in the state, where do you see our affordability problem?
Well, certainly from a tax perspective, New Jersey consistently and study after study has almost the highest tax burden in the country from a competitive standpoint. We usually rank 50th. A lot of times people just like to point to the corporate CB business tax, but a big chunk of taxes on businesses are paid through the gross income tax by mid and small-sized businesses that need to be factored into this. And when you look at everything overall, you know, it almost looks like we consistently want to be the either the lowest ranked or the highest in anything, the highest corporate rate. And I thought it was kind of funny that Tax Foundation just came out with its latest report ranking the states, and while Jersey stays at 50, they were going to move this corporate income tax from a rank of 49 up to 48% because they figured the corporate tax rate went down. But in the meantime, as the study went to press, the rate went back up to the highest in the country. So while we might hold that better rank for a year till we get the new study, we certainly know that it's already going to bring us back down. So.
Yeah, it's not a good sign when we have trouble keeping up with the bad rankings that we have. Mark, diving a little more into property taxes, because it is something we hear about a lot. It's something that corporations pay. It's something that every business in the state pays, every homeowner pays, everybody's paying it through their rent. It's always been talked about, but is it something that we're that much higher than other states? Are there reasons, good reasons that drive that, and reasons that something Senator Oroho said before, that the value proposition, are we getting value from that? Are we not? Do you have anything you want to add on that?
Sure, there's a lot to unpack there. Well, I get that question asked about why are our property taxes so high a lot, and it really comes down, I've identified there's really four things in the state that I think drive it, and it's debatable that you could probably add a couple other things onto it. The first thing is our cost profile. We're an expensive place to live and work because we don't have a lot of land. And that is reflected in the fact that we're the most densely populated state in the country. We have the four most densely populated cities in the country in New Jersey. They're all in Hudson County. We have 9 of the top 20. And you add in diversity at all levels to that, and we're a remarkable mix of public policy challenges. That how do you manage all of this, right? Along with that density is our infrastructure age. We were one of the first states to develop an industrial base in the 1800s. And then as we got into the late 1800s and the 1900s, we expanded ahead of a lot of other places. Well, we're now finding out and realizing, well, that infrastructure is starting to age. We still have water lines that are 100 years old that we are now replacing. We have sewage systems that were built in the 40s and 50s and 60s that are hitting their useful life. So our roads and bridges, same thing. That density, add the density into infrastructure. When you're maintaining roads and bridges, it becomes expensive because there's always a lot of traffic going on them, and the cost of construction of those things and reconstruction and maintenance is more expensive than it may be in the middle of Kansas, where you don't have anything around when you're repaving a highway. So density and infrastructure, and this next one I'm going to say, it's not that I'm picking on any groups here, but we have had our politics in the state have been very union driven over the decades and generations at this point, particularly when it comes to public construction and public employment. The fourth issue is transactional politics, and those things work together. Is that our political system has evolved, that we have various groups in the state that have significant influence on getting people elected. And our construction trade unions, who have done a great job representing the interest of their members, basically add to the cost of what we might otherwise have to pay in a more competitive environment for construction work. And this is a touch point for a lot of people. But at the same time, our public sector labor union policies in the education world, in the public safety world, are basically very tilted toward favoring the employees. Now, I'm not going to say I'm going to be the first to defend the need for unions to protect the interest of public employees, because public employers in the political world can be very unfriendly toward individual employees, and protection is needed. if you look at how our balance is when it comes to negotiating and public policies that give local government officials and county officials the ability to manage their workforce efficiently and effectively, we don't do that good a job. And that needs to be rebalanced. Finally, we've been talking and complaining about property taxes as a state for over 200 years, and very intensely for the last 125 years. The problem is not going to go away. It is going to be with us. We will always be, compared to other states, a high tax state. We don't get away from that. The issue is we've got all these other assets that Steve and Alan talked about that provide a part of the value proposition of living and working in New Jersey. If people were so upset, and Steve talks about, we've had a lot of high wealth people leave and we have college students who leave. That's been going on for generations. But we wouldn't be as crowded as we are. We wouldn't see the housing growth that we continue to have, particularly in senior citizens as well, that people are satisfied living here, that there's a lot of satisfaction. Surveys show that. So yes, we complain about it, but we're still happy. There's a lot of people who are happy, continue to live here because of the assets that we have, despite the tax environment.
Thank you, Mark. Deb, corporations pay property taxes too. You obviously talked about the CBT, you talked about the income tax, but it's an issue for businesses as well. Can you talk about that a little bit? You have a beautiful corporate campus that I've been to, and I'm sure taxes are high on that. How is that a business issue?
Well, businesses do pay a big share of property taxes. The State Tax Research Institute for the Council of State Taxation just came out with a study last month showing that nationwide businesses pay about 37.9% of property taxes. In New Jersey, that percentage is 45.4%. So of the property taxes paid in the state, the bulk of them are paid by businesses, small to large, on the investment and infrastructure that they place in the state.
Thank you, Deb. Now, Alan, thinking about property taxes, thinking about the corporate taxes, other taxes, you see it all as an accountant that represents your clients. What do they see as their big struggles? What are the struggles for small businesses, for Main Street? What are you hearing about that drives our affordability issues right now?
So, I mean, taxes are definitely a component of that. And again, that goes to what I said earlier about an image issue. And, Mark touched upon it. I think we don't do a good enough job in articulating the value that people get for their tax dollars. For example, if you carve out the education, the school part of property taxes, and you're left with just the local taxes, which pay for your snow removal and de-icing of roads and for the sewer systems and all those other kinds of things out there. My rough math on an average basis, taxpayers are paying about $350 per month to support that based upon the average. Now, if you ask somebody what it costs for them to clean their driveway or what it costs for them to mow their lawns, on a monthly basis, and all the other things that they do to maintain their household, all of a sudden their taxes don't look far out of line. So the point is that taxes, while they are a cost and they're a problem, and we need as a state to continue to drive our costs down so we can drive our taxes down, we need to do that. The real cost here in this state is our labor costs. It's our cost of regulation that add to the cost of doing business, that ultimately, at the end of the day, dissuade businesses but from potentially located in this state and therefore employing people. So I think that most businesses, while they are concerned about taxes, and they rightfully should be, that is the tail that wags the dog. The real cost of business lies in your labor costs, your cost of healthcare, your cost of, and as I'm referring to businesses now, your cost of other things that really are above the line before you even get to the tax component. So, when you ask about other things that are affordability, I just think that where we're located and what we're paying people drives that. But we don't want to bring those numbers down. We want to embrace that we can attract good people for a good wage and at the same time try to reduce the cost of doing business in this state as much as we can.
Now, Senator Oroho, we've been talking a lot about we have an affordability issue. Whether or not it's a lot of labor costs, it's a lot of tax costs, it's other costs, it's the density, it's the real estate. But stepping back from a second on what those are, what are we doing to address those issues? What in the legislature have you worked on, is the legislature working on now, has worked on the past few years to look at solving or at least reducing, minimizing some of these affordability issues?
Thank you, Chris. And what I'll do is kind of address a little bit of where we are and how we got there, and I think how we certainly have to try and solve it. But one of the big issues that New Jersey has is, particularly in politics, is in Trenton, people like to make promises but no payments. And if they're going to say that they're going to make payments, they'll say we'll start paying them. It's like the Wimpy effect on Popeye says, I'll gladly pay you on Tuesday for a hamburger today. And unfortunately, that's been going on for way, way, way too long in New Jersey for decades, for seriously, decades and decades. And so like I said, the issue of, making the promises and no payments, we have got to learn. I wish there was a way that New Jersey would have to be on a present value basis of actually paying for things that they promise today. The interesting thing as well is New Jersey, unfortunately, has grown up where most successful states that have found ways to lessen the burden on their residents by actually having out-of-state or out-of-country people, pay for the services that they're using in a number of different ways. New Jersey, unfortunately, didn't do that for quite a while. And one issue I'll bring up right now, it's a current issue, and it's a huge issue, and that's these people who are our residents who are living in New Jersey and working in New York, and it's been happening for years. It's an issue I've brought up for years and years. There's about a $4 billion credit, and we're not talking about double taxation. It's about a $4 billion credit that New Jersey gives to other states for income taxes that people pay in those other states. So essentially, their income taxes go to where they work as opposed to where they live, except for Pennsylvania. It's actually the only one agreement that we actually have. And we're not talking about double taxation. New Jersey has just never been very, I don't think, aggressive like New York has been in where that allocation of income. And the interesting thing is this: they are being double taxed for one reason. They're paying income tax, not just New York as an example. They're paying income tax to New York, and since this is probably at least $1 billion item, they're paying higher property taxes in New Jersey because we're not getting our fair share of that allocation. And where does that money go? That money goes to education, which is the highest use of our income tax dollars. It also goes to the senior freeze program, and it also goes to homestead rebates, which all deal with property tax relief. So those are the things that we have to start to look at, and how do we have, lessen the burden on New Jersey residents and actually help where other states do, and say, out-of-state residents or people who don't live in New Jersey, having to, pay a little bit more for the services. How do we fix some of this stuff? I served with yourself and Mark on the path to progress. There's nothing in there that's really, a silver bullet that, all of a sudden this is going to change everything. As I said before, it's about, fiscal discipline. Once again, we see where, and it's not just this administration, but almost all administrations have, when they go out and they borrow, they now are like, for the $4.5 billion, deficit spending borrowing they're just doing, it's a 12-year non-callable, facility. There's the transportation trust fund debt that's going out that they don't start making payments until interest only until 15 years. These are the kinds of things we got to stop doing. And unfortunately, New Jersey keeps, making the same mistakes it's made over and over again. And we think that, okay, we're on a modified cash basis on our budget. And we think that, hey, we have a surplus. No, we have no surplus. we have over $200 billion of unfunded liabilities. If it was on an accrual basis, we certainly wouldn't have a surplus. So long answer, but I think that's, first and foremost, we got to be honest with people, and we need time and discipline. And unfortunately, there is time, but there's been very little discipline.
Hey, Chris, if I could just
Senator,
follow
I think
up
part
on-
of that discipline is our government debt issues, our government overspending issues, and I think Path to Progress is something DIA was happy to support, is happy to support, would like to see us move on. A lot of the Path to Progress report was on reducing that government overspending and bringing our spendings in line with other states, and hopefully we can get there. Mark, as somebody who served on the Path to Progress working group, I want to get your input on Path to Progress.
So I think we came up with a lot of good recommendations, and I've said that they were supposed to start a conversation and provide some fences where you can start having a discussion about dealing with public pension costs, with dealing about tax policies, with dealing about how government operates and the issues we see with that. Pandemic kind of put a stop on really any serious discussion of those issues going forward. So, but as we start to see ourselves moving through and past that, we really need to start talking about those issues more. I think one of the challenges we have, and I think you talk about, we use the phrase overspending a lot, right? And we say, we're 50th when it comes to this in taxation. I get bothered is, what is the academic part of me, is that when we do these rankings, the comparisons aren't really accurate or fair. Because when you say, we're spending more than other states, well, other states have a very different demographic composition than we do. Their infrastructure, their density, the things that drive their spending is very different from what drives our spending here. So I get concerned when we talk about, well, we should be here compared to other states. No, I think we need to be smarter about what we're doing ourselves and start benchmarking ourselves against ourselves and saying, okay, what can we do to control the rate of increase in that spending? How can we reduce that level of spending? Where can we be more efficient in doing that? Where can we pass laws that give municipalities and counties more flexibility so they can spend less? So, or their costs don't go up as much, all right? The legislature the legislature has one tool to use, and that's pass laws to fix things. And when there's something wrong when with all due respect to Steve and his colleagues, when residents and businesses find something that's wrong, legislators know really one way to try to fix it, and that's introduce a bill to try to get it passed to try to fix it. That's not always the best solution to things. And some things maybe we don't need to solve by laws and regs. Some things we need to let people to work out on their own. So balancing that in our political environment is a very challenging thing to do. And we really need elected officials that are going to say, okay, let's get serious about this. We're going to piss some people off. We're going to have to say no to some people, which is really hard for legislators to do. But we're not going to be able to do all the things we want because we can't necessarily afford them. As Steve said, we're now doing transportation trust fund payments where it's going out 15 years before we start paying down principal. And that happened where nobody saw it happening. It was a surprise to everybody except the administration. So these are the things we need to talk more about. We need more transparency on them. We need to engage the public in some of those discussions as well, so people have a sense of, well, how are we making these debt decisions? Okay, we've approved the debt. Now, how are we going to pay it back? The legislature in 10 to 15 years is now going to find, oh, here's a bill we didn't expect that they committed 15 years ago. Right? So we need to be smarter and try to get some of those things under control better, I think.
Thank you, Mark. I want to turn over to Alan. Alan had a significant contribution to Path to Progress, didn't serve on it, but one of his ideas was an important part of the Path to Progress report, referred to as the BATE, Business Alternative Income Tax, or pass-through tax. And Deborah before mentioned how the income tax is also a big business tax, and that came to light after the Federal Tax Cut and Jobs Act and the SALT changes, And honestly, those SALT changes are probably one of the impetuses to the Path to Progress report. But those SALT changes also got Alan thinking, and Alan reached out to the legislature, the governor, and pitched an idea to help our affordability in the wake of these federal tax changes. Alan, do you want to talk about that law that was your idea and Senator Oroho actually sponsored to become law?
Yep. So thank you, Senator Oroho, for being a sponsor and an advocate of that.
Well, thank you, Alan, for coming up with the idea.
Thanks. Well, I'm not the only one who came up with the idea, actually, and I may have been the only one who actually took the time to write then Governor-elect Murphy and other business leaders to kind of get some action on it. But the beauty of this particular tax legislation is it doesn't cost New Jersey a single penny in lost tax revenues. When the Tax Cut and Jobs Act was passed in 2017, it effectively raised New Jersey's net tax effect by 30%, depending upon your federal tax bracket. And a lot of business owners were in the highest marginal tax bracket. So effectively, their New Jersey taxes would go up because of the lack of deductibility of those taxes by 30%. So by the business alternative income tax debate, we were able to reverse that by creating an entity level tax where the state collects the same amount of revenues, the individual taxpayer pays the same amount of taxes, but basically it became a deduction on the federal basis. And just last week, I think it was last week, maybe the week before, the US Treasury came out with Secretary Mnuchin came out with a press release that said that the federal government is going to respect and accept these pass-through tax legislation. So we were right on it, Senator Oroho, and it really is a great win for New Jersey businesses by reducing their effective New Jersey tax by about 30%, bringing their federal tax down as well. So it's a great thing for New Jersey, and it's these kinds of ideas that I do think can ultimately help make New Jersey more competitive. If I had one disappointment on it, is I don't think the governor in particular, but others in the state promoted this enough as something that New Jersey was doing to help businesses. We get beat up a lot in the state, and here is we did something to save estimate somewhere between $200 and $400 million, about the equivalent of what the millionaire's tax is going to raise, and it kind of got lost in the shuffle. So anyways, I'm really very proud of everybody's efforts on that regard, and I'm pleased that we were able to get it through. And we're now working through the details at CPAs today on how it's going to apply to our clients. So it's a good thing for New Jersey for sure.
Thank you, Alan. It was an excellent achievement that our state should be happy with. I get going off of that as an affordability solution. Senator Oroho talked about the tax nexus changes with commuters that are staying at home now, and maybe money we can get. I think anytime we could increase revenues or lower taxes, but actually not hurt the state of New Jersey in any way, it's a good thing. And I go back to thinking about Senator Oroho's Transportation Trust Fund tax reform, and are there solutions out there like that? It was something BIA was happy to support, something I was happy to work with Senator Oroho on, where some taxes that were outliers on the high side went down, some taxes that are outliers on the low side went up. At the end of the day, it was a net tax cut for New Jersey. It increased, I think, capital investment in the state. And are there creative outside the box solutions like Alan's bait, like the tax nexus issue, like the Transportation Trust Fund tax reform that we can work on? I mean, anybody have any thoughts out there on things that we could look into, other taxes that are outliers that we should try to address in some way to help our residents or maybe spur business growth?
I don't have I'm not a tax person like that, and I don't have a specific idea, but one of the things we suggested in Path to Progress is that we create an ongoing study commission that looks at tax policy, that we've got some scholars and some experts in taxation who are able to look at what's going on in the business world and say, okay, here's where things are changing, here's where our tax policies are incomplete. For example, we do a lot of things. We've done things for decades, and they were intended to solve a problem that existed at one point in time. But then the world changes, and our policies don't change with it. We need to start looking at those things. And I'll give you an example of taxation. When cell phones were first started to pop up 20 years ago, we decided that we would start taxing them, all right? And we put some added taxes on them because at that point they were a luxury item. Only people of more wealth were able to afford them. But now they become a necessity for life. So we've got people at the high end, people throughout the income spectrum in the state are paying significant amounts of money for their cell phone service, where it's their lifeline, essentially. Data is a lifeline today. It's how people get around. That's how people get jobs. It's so much of their life. Yet tax structures for cell phone use are very high, and yet landlines, which we also tax, are decreasing, and they've been moved to cable service. So the way we tax telecommunications infrastructure is, I would argue, sorely out of date. It's also limited by federal law that says we can't tax internet services, because that's an up and coming industry. When 20 years ago, when they did that, yeah, that was a good idea, but maybe not so much anymore. So we've got some serious issues with that, but we need a process that looks at these issues on an organized basis, where you've got people that can make recommendations to the legislature, get some debate going on these things to try to make structural improvements in how we manage these things.
Thank you, Mark. Deb, you might be an expert on telecom taxes a little bit. Any thoughts to Mark's idea?
Well, having a study and tax policy study, there was one on communications taxes a number of years ago that made a number of recommendations to modernize the tax structure and move forward. It really, I think, was a great effort, and they brought a lot of people together to do it. Unfortunately, the study sits there without anybody looking at those recommendations, and has since that time. And in the past, Jersey had some studies on the corporate business tax. There was a little bit of success on reforming some of those things. That's when the state put in a single factor apportionment and removed one of the minimum taxes on corporations. But since that time, a lot of the things have come back in CBT on the corporate business tax. In fiscal year 18, the corporate business tax rose by 87% because the law changes, and from 18 to fiscal year 19, another over 10%. So corporate taxes are going up. New Jersey has really gone into worldwide taxation. Unlike any other state that's industrialized or a headquarter state, it's the only state that's taxing a big share of foreign income of U.S.-owned companies, because they don't do the same, and they can't, for foreign-owned companies. So the pharmaceutical industry, for example, is hit really hard by that effort in New Jersey to tax worldwide income. And Chris, from the effort we had, and I think, Alan, you were on the calls on the draft regulations that came out from the Division of Taxation, wherever they could turn, they were almost going against legislative policy and adopting combined filing to be as broad as they can in taxing worldwide income of corporations. So we would welcome a study of how New Jersey is treating multinational companies that compete in a global economy and tax their foreign income.
Thank you, Deb. And I think on that too, moving away a little bit about talking about the solutions, but one more thing on affordability is it's not just the rate that might be set in statute. It's how you work with government. It's that does government put burdens in front of you, and our CBT laws are not always the easiest to work with. And Deb was very involved with BIA and a lot of business groups around the state on a recent changed CBT law we call the Technical Corrections Bill, and made it a little bit easier to comply and reporting and administer the corporate tax, but we still have things within the CBT and the regulations that are outside of the legislative control that make CBT, I think, more difficult in New Jersey than other states. And Deb, from a multi-state, multinational perspective, I mean, is New Jersey CBT more difficult than other states to work with and deal with?
Yeah, I'd say it is. I would, when you mentioned the technical corrections, it was really good to work with the Division on Taxation of that. They really worked closely with us to try to address things that they could within the statute. We still haven't, hopefully we'll have a similar discussion on the regulations, but it is more complicated. As New Jersey went to combined filing, the standard almost nationwide is to use Water's Edge. And our legislature pushed back on when combined filing was being debated and said they wanted water's edge. But as you can see from the regs and other things, they're moving to more of a worldwide concept that is making it a lot more difficult on the business side for the CBT computations and what's pulled in to the base.
Thank you, Deb.
And Chris,
Yes,
if
Alan?
I may, that's a tax on businesses that's not a tax. That's the cost of regulation that increases, makes it more difficult for businesses to do business in this state. And we need to be making it easy for those that want to work in, to work and to employ people in this state, not making it more difficult. And so, Deborah's right. We need to do more in reforming that area so that businesses don't want to leave because of that, but in fact will embrace New Jersey because of our simplicity of regulations, not because of our complications.
Thank you, Alan. That's a perfect segue. And Senator, maybe you're going to say this, but I want to turn over to you because overregulation does impact our affordability, and you've been a leader on that, where with Governor Christie's Red Tape Review Commission, and now pushing a bill, the Government Efficiency and Regulatory Review Commission in the legislature that's passed the Assembly. Hopefully it can move in the Senate at some point soon. But do you care to add something on the burden of regulations?
Oh yeah, and that's actually the tax that people don't recognize, but obviously it's the cost of doing things. We had the red tape. When I was in corporate finance in the corporate world, there was a thing called the activity-based costing, and looking at cycle time and the idea of every activity cost something. And so when we did the red tape review, I know it was Senator Sweeney and myself who had a bill in. We tried to mimic it after when I worked for W.R. Grace. There was J. Peter Grace was appointed by President Ronald Reagan to the what became the Grace Commission, and the idea that to continually review regulations and to give the public and businesses an ability to come before some sort of body to talk about the regulations that they're dealing with, I think is a terrific idea. That it's something that should be ongoing all the time, because let's face it, technology changes, things change all the time, and unfortunately, government is very slow to recognize those changes, and sometimes it's processes are just kind of anchored in the past. I'll just go back real quick to the topic we were just talking about before. The number one issue we could look at right now is that whole issue of, and technology has a lot to do with it, where that New York, New Jersey, and other state issues, and quite frankly, that would help the affordability quite a bit. Also, and we work with Deborah, Chris, we all worked on. I remember when we did the single sales factor, and we talk about capital, and we try to make it easier for the corporate business in doing the single sales factor, because it used to be based upon sales, payroll, and property. And you think, okay, why would I want to invest in property in New Jersey if I'm going to now be paying part of my income tax based upon something like that? So that was a good change. Then they came and did the combined reporting, which I would have to say that there's no legislator who really understands what combined reporting is. And unfortunately, it's something that made it significantly more difficult. And I think the water edge is what most states do. We've seen states go to combined reporting and then come back off of that. So unfortunately, we talked earlier, and I'll finish with this, the idea of an image. And I talked about the idea that New Jersey hasn't had a brand in a long time, and unfortunately, the brand has become difficult to work with. And I wholeheartedly agree with Alan's perspective of saying, hey, listen, we have to come up with a brand and show and start showing how we're going to make things easier as opposed to harder.
Thank you, Senator. I guess piggybacking off that a little bit, in our state image versus other states, I think all of you on this panel have probably seen the impact of a business or a person leaving the state. And Senator Oroho has been a leader talking about out-migration of wealth in the legislature. Alan has probably dealt with clients that have left the state or expanded somewhere else instead of here. Deb, as an employer, has probably seen decisions about where you grow your business and where you don't grow your business. And Mark has probably seen the impact on local taxes, what happens when a major employer, major rateable in one of his municipalities or somewhere in the state leaves, and what that does to the local tax base. So I want to talk about that leaving because they're retiring and it's too expensive to retire here, leaving because the business costs are cheaper elsewhere. What does that do to our state, and how does that, how do we reverse that? But how does that, something that if we improved a little bit on the out-migration, what could that mean in terms of the new revenues that could help our state's affordability? Mark, you want to kick us off?
That's hard. I'm not the tax policy guy. I think, yeah, so I can definitely talk about the fact that when we do have major employers who leave, the impact on a municipality can be significant. We can look at Hoffman La Roche when they closed their Route 3 campus and the impact it had on Clifton and Nutley. However, from the ashes of that, we have a brand new development going in that's bringing in new ratables and new jobs and new employment there. One of the things about Jersey is that there's only a limited amount of land around, and people are going to find the best ways to use that. I am concerned about the way we do redevelopment in the state, the way we do redevelopment incentives through payment in lieu of taxes. We are basically working on policies that were really good in the 1980s when nobody wanted to build in cities. And we're using those same policies today where pretty much everybody wants to build in cities. Now, cities are different places to build and construct, but we really need to be looking at how we go about doing those things. The property taxes are hard. All right, there's no question about it, but they are one of the things that can be most easily measured on a uniform basis. So there is a lot of value in taxing property. It can be equitable, because if you don't have a lot of income, you're not going to own or buy a lot of property to pay taxes on. So there's an underlying core with that, but I think we can do better with tax administration, and I think Deborah pointed that out, that tax administration is a big part of the cost of doing business in the state, and maybe we need to spend some more time on that as well.
No, Alan, do accountants feel pressure to sometimes tell a business that it might be cheaper to operate elsewhere, or tell a retiree that it might be cheaper to move to a Florida than to retire to New Jersey?
I mean, it's part of our responsibilities to point out to our clients what is the best place to operate and or retire. There's no doubt about it. But I will tell you again, I keep on coming back to this image thing situation. You know, with the New Jersey, sometimes you just reach a tipping point where people just get aggravated and they're like, I'm out of here. Yeah. And, you know, you take this millionaire's tax, okay, and $4 million between $1 million and $5 million. So we were, you know, the tax went up by about 2%. I think it costs about $80,000 for somebody making about $4.9 million, right? This additional tax will cost $70,000. It's not going to change their life. It's not going to even be meaningful to their net worth. But you know what? How many phone calls I received when that millionaire's tax passed because people are just reaching a tipping point and they're like, I've had it. I'm out of here. Enough of this. Now, cooler heads probably will prevail. And, you know, especially in this COVID environment, it makes it a little bit more difficult to move away from family and become a resident of another state. But that's the point, is that we don't, as a state, we don't think about that. We raised $350 million under the millionaire's tax, and then we turned around and we gave it away. We didn't even put it towards saving infrastructure or a down payment on some of our future obligations. We gave it away in order to get it through. And that's just, you know, it's creating that tipping point for the people who can move, right? Those that have the feet and the wherewithal to move, and in order to get something through and satisfy people who are probably not looking for that tax cut anyways. So this is what I mean about an image problem in the state, that we have to do more to try to reduce the burden, broaden the base. Senator Oroho is absolutely correct. We need to tax people out of the state more. That's what Florida does with their tourist tax. That's what South Dakota does with their mineral taxes. That's what Texas does, with their oil taxes. We don't have those natural resources, but if we can expand in any way we can, in ways to be able to tax people in other states, it's going to be a huge help to, solidifying our tax base. So that's what I see, Chris.
Thank you, Alan. Senator Oroho, out-migration, you want to comment?
Yeah, just real quick. I mean, one of the things that we don't get because of the issue of everything we've talked about here today is, and Deborah and would see this certainly with AT&T, I'm sure, and other companies. But when corporations make decisions about capital investment over long term, other than like New Jersey in the legislature. New Jersey legislature plans long-term planning on a watch, as opposed to corporations that look at it for 5, 10, 15 years. So what you end up not getting is when a company is looking at that capital allocation, you don't get the growth. They decide to, if a lease is going to come up, they're going to go renew the lease elsewhere, or if they have a new product line, they're going to decide to do that new product line elsewhere. So one of the things that New Jersey didn't get was, the growth that other states had received. And plus, as I said, we have the out-migration. And a lot of times the administrations will say, well, you really can't look at that income information from the IRS. What else do we have? I mean, it's there. That's you look at it's based upon change of addresses, and we can see what's happening. How much different would we be if we just got back to if we got to a net zero, just a net zero where we were equally coming in as well as equally leaving. It'd be a tune of about $3 billion in adjusted gross income a year, which is pretty significant since 2004. We're up to close to it's approaching 40 billion right now. So I think Alan is 100% right. It's kind of like the brand of New Jersey becomes, okay, what's next? There's no predictability other than what are they going to do to me next? And I think it becomes the straw that broke the camel's back. And it might be something that's right on the margin. And what is it that made somebody decide that they were going to move away from their family? And, that's a hard decision. But when they take a look at it and they say, hey, this would be the best move, for us, they've had enough. That's the, unfortunately, there's, one decision after the next where New Jersey has decided to make it more difficult to stay. And I really do believe, and I'll end with this, but I really do believe New Jersey working on a positive brand, really having a positive brand and making some of these really significant decisions like Massachusetts did. I mean, Massachusetts only a decade ago was, looking in, pretty bad shape. And they reduced their taxes, they reduced some regulations, and quite frankly, within a 10-year period, they have become, we've talked very much about the innovation indicators that Massachusetts versus the rest of the region. So that's something I'd like for us to obviously to continue to work on.
Hey, Chris, I think it's important to realize is that, the past two administrations, I think, have started to recognize that. We've got the Choose New Jersey organization out there, which has been doing some good work in promoting the state to the business community. But I think, that is what we start building on. And there may be some more efforts instead of just necessarily talking to businesses that want to relocate here, but reminding our residents as well that here's what we have here and here's what you're getting for your tax money. There's a lot that people get for it. That value isn't necessarily appreciated because in some cases, well, it is high. And we need some tools from the legislature to permit local governments to have more flexibility so they can get their arms around their cost structure and make sure it is equitable for the folks who live in those places.
Thank you, Mark. Last question, I think, as we're approaching our hour, and it's been a great panel and a lot of great thoughts so far, is And I guess this fits into what Mark talked about with the tax abatements on the local level and Senator Oroho talking about the unpredictability. We recently let our tax incentive program lapse. And one of the few states in the nation that does not have a broad-based tax incentive program. And right now there's a lot of debate between the governor's got some ideas, the assembly does, the Senate does, and the Senate, Assembly, and governor have all produced reports. In a high-cost state like New Jersey, where affordability is an issue, where do you see the role of tax incentives and how important are they to getting our economy to grow the way we all want? And anybody's going to take that one?
I'll start. I'll start if you want. I wish we didn't need the incentives. I wish we were just competitive to start. And you know, the truth is, it's the only thing that gets us sometimes a seat at the table. Because of the brand that we have, quite frankly, a lot of times people aren't going to think about it. Now they may think about New Jersey because obviously because of the assets we have, our employee base, our location, our educational system. That's always going to have people at least take a look at New Jersey. But then they look at the past and what we've done, and unfortunately that's become our become our brand. And unfortunately, that's what we have to. That's all that we have to fix. But it's, as I said, it's the only thing that gets us a seat at the table right now.
Deborah Allen, have you much experience in working with this for your employers or clients?
Deborah, go ahead. I'll follow up after you.
I would just, going to the points that were made, it would be better if we had a great tax system and you didn't need incentives. But the way our system is, when a business is looking at, do I locate or move more into New Jersey, those factors come into play. I don't think you're going to have as many companies moving out, but when companies want to look here, why put something in New Jersey, given our image, given certain activities, and without the incentives, there are certain things that are just does not make sense economically to move into this state.
Thank you. Alan?
Yeah, so this is not really about affordability as much as it goes to, again, New Jersey's image a little bit. So we have these incentive programs, and then what happens? On one hand, we pull the rug out from under people. We don't fund it in a way that they were promised. So then employers and businesses say, how can I trust this state? And then even worse, those who took advantage of it, and I'm not talking about the bad actors, I'm talking about good actors, were demonized because they took advantage of these programs. Which, what does that do? It makes businesses say, well, why would I even bother doing that? Let me go to South Carolina or go somewhere else where they welcome me with open arms and I have somebody who's working with me on a day-to-day basis. Whereas in New Jersey, if I take this money and I take this incentive, 2 years later, somebody may criticize me because, for whatever reason, I took this money. And again, that's just the wrong kind of message we want to provide for economic development.
Thank you, Alan. Excellent point. Mark, anything to add on the local side of that?
I think it's a lot. I'm not an expert on what incentives are necessary, but we do know that in the last round, we had a lot of some businesses who were the bad actors, as Alan calls them, who were gaming this system and brought shade on everybody. And that's clearly not what we want. But I think that goes to how the incentives are designed, how they're administered. We saw failures in internal control and EDA back in the around 2015 or so, where the programs weren't administered as well because of either policy decisions or lack of resources or intent to make sure that people were doing what they said they're going to do. So there's accountability that has to be baked into these things right from the beginning.
Thank you, Mark. And as we're up and time is done, thank you very much to all of you. It was a great conversation. I really appreciated all of your perspectives. NJBA hopes that we can take some of these good ideas that we've heard this morning and move to where we're chasing capital to New Jersey instead of chasing it from New Jersey, especially as we're preparing for a post-COVID-19 economy. And we're going to need as much help as we can get growing our economy, growing our businesses, and seeing new jobs and wage growth. So thank you very much to all of you. Thank you very much for everybody that is listening. Have a good day.
Thanks, Chris.
Thank you.
Thanks.
Thank you. Great panel.